of the biggest themes of 2015 so far is that we've seen a kind of a differentiation within particular sectors. This is new. Hasn't been like this in the last 5 years. Rather than having nearly every stock in a given group go up or down lockstep, like in the recent past, we've witnessed lots of winners and lots of losers, and even the strongest groups out there, like retail, which overall has been on fire since the beginning of the year. As you'd expect, some retailers that reported hideous same-store sales declines this past quarter are simply out-and-out losers. And they can be toxic to your portfolio. And that's how I'm currently feeling about Abercrombie & Fitch, which is the quintessential teen retailer. Now, A&F is an incredibly volatile name that's made not one but two round trips from the teens to the 70s and 80s in the past 15 years. Isn't that incredible? When it's hot, this thing is smoking hot. And when it is cold, it is just nasty. Right now, Abercrombie seems to be very much out of fashion. Both with the teens who shop there, or did shop there, frankly, and on the Wall Street fashion show, more importantly. When the company reported in early March, it posted a hideous 10% decline in same-store sales, right on the heels of another 10% decline the previous quarter, in spite of the broader strength in retail. So it's no wonder A&F's stock got hammered, falling more than 15% the next day. A lot of people felt there could be an upside surprise. Were they ever wrong? And while this stock, which is now down an astounding 43% over the last 12 months, has had a bit of a dead cat bounce since then, I think this weakness is the opposite of a buying opportunity. No, do not buy. Not only is Abercrombie delivering heinous numbers, but the company declined to provide any forward same-store sales guidance or earnings guidance, which suggests that management doesn't have a clue about the future of their business. Although they did say that the first half of 2015 will, quote, remain challenging. When you hear challenging, this is what you should think. It's the last word you want to hear. Oh, and let's not forget, Abercrombie still doesn't have a permanent CEO after former Wall of Shamer Mike Jeffries did the company a huge favor and retired back in December. Sometimes what's bad is bad, and that's really all there is to it. On the other hand, sometimes a company will report a number that looks bad in absolute terms. But when you consider the overall trend, it's actually very good in relative terms. And in this business of stocks, relative terms are the only terms that matter. So I want you to think about another teen retailer, American Eagle. When they reported nearly a month ago, American Eagle delivered flat same-store sales growth. Flat. And what happened? The market lapped it up. With flat, the stock soared 7.7% higher the next day. It's now up 15% this quarter. It was on a flat number. Why were this company's flat quarters so impressive? Who likes zero comp?